Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another Monday live stream. I hope you are all doing well. Hope you had a nice weekend. I know I did. I had a relaxing weekend for the most part. I got some, well, I say relaxing. I worked around my house, which is like, to me, it's great. It's nice to catch up on projects at home. And I was cleaning up my yard and it was great. Intro goes hard, can't lie. Thank you very much. Appreciate that. Team did a really great job putting that together. Will gold rally into the New York session as well? Look, gold and silver are they're just monsters right now. Watching from South Africa, well, thank you for doing so. And I hope things are, what's the weather like in South Africa? Is it getting warmer there? My friend Kenzo, who lives in South Africa and periodically comes on the show, you know, it's always funny whenever I talk to him. He's wearing the opposite types of clothes to what I am. I guess right now it must be, so if it's like fall time here, it's springtime there, so it's warming up. Very cool. Look, I kind of like the cold, to be honest. I like colder weather. I don't like cold. Like I don't like super dead of winter cold, but a little bit of like put on a jacket, light a fire. Ooh, that's the best. It's my favorite time of year. Actually, you know, this time of year just in general is my favorite time of year because, you know, the tail end of the year, you get the holidays, you get the cooler weather, you can do some fires outside. Oh, just love it. Just love it. This weekend, I did a Sunday video, talked a little bit about my outlook for the week ahead. Look, gold and silver still look like monsters. I'm not fighting this dragon, and everyone who has tried has fallen. If you've tried to short gold in the last few months, it's been a disaster trade. And I say that not with, you know, I know there's a lot of people who've gotten real hurt by this move in gold. That's what happens every single time. I mean, I feel like a broken record. I've said this for years, but every time gold has one of these kinds of moves, I get comments of people who are like, I blew everything, like trying to short gold. I was betting it. And I just don't know how many times we have to see that story play out. I guess it's new to that person every time. But for me, I've heard that story 7 quadrillion times. You know, so-and-so was shorting gold and believed it was overbought, and it just kept going anyways. One of the things that I have learned in trading is a short position in gold is a long position thinking that fiat currency is going to gain value. For the last 100 years, that's been a very losing bet. Fiat currency continues to lose purchasing power. Central banks continue to print money. Governments continue to be reckless with their spending. It's no wonder that gold goes up over time. Don't fight the natural order of things. So my opinion on this is gold overbought? Sure. But how long have we been saying that? We've been saying gold, it looks a little stretched for weeks. Weeks now, right? We broke out of this all-time high. That was huge. Not one time in this move have I been like, oh yeah, that's a short, right? Because a lot of people get completely smoked. I had somebody, I don't know if they're still watching, and I don't say this to press my, you know, finger in a wound by any means, but I had someone who kept commenting that, you know, they really trusted their mentor, and their mentor kept saying, you know, gold's got to come down. It's got to, I guess, you know, the lesson here is, look, I don't care what strategy or system or mentor you have. Nothing is right all the time. Not some mentor, not some influencer, not some creator. Nobody is right all the time about markets. And one of the most mature things you can do in trading and investing is realize that sometimes you're wrong and you just accept it, right? I'm that guy, Nick. Are you that guy? I can't remember who it was, but yeah, I just had somebody who kept referencing, maybe it is you. They kept referencing, I have a mentor and he said gold's got to come down. Look, mistake number one that traders sometimes make. Well, most traders make this mistake. It's kind of a natural mistake to make, and I'm not faulting anyone for making this. But when you first get into trading, sorry, I'm trying to charge my watch here. There we go. So one of the first mistakes a lot of traders make is when they get into trading, they start watching YouTube. I did this, so I'm telling you from experience, right? They get into YouTube and they say, this guy, he's got a lot of followers. Like this trader Nick guy, he's got, a bunch of people following his ideas. He must know something that I don't know about the markets. And then with maturing in markets, you realize, no, they don't. I don't know what the price is going to do tomorrow. I'm not certain by any means. Now, the false prophets, the fake gurus, the people who will sell you something that you do not need, they will tell you they do know. They will tell you, oh, trust me, bro. Trust me. I know like the hidden secrets of the market. I have a secret strategy. I figured it out. All those people are charlatans. Trading is bigger than the markets are bigger than all of us. We don't know. You never know. You never know with certainty. Now, does that mean you should just like that it's pure gambling and that you can't make any money? No, you can still make money without knowing something for sure. You can make educated guesses and control the downside when you're wrong. What does that mean? That means stopping out. That means accepting you were wrong about an idea and positioning small enough so that you don't get killed in a move like this. If you have a reason to short gold, do your thing. But if your reason is it's gone up a lot and it's got to come back down, how is that working for you? It's not. It doesn't work in gold to think it's gone too much. It's got to reverse right now. Right now, if you are like super long term and you think that there's a bigger picture theme where you think the dollar is going to strengthen and that geopolitical stuff is going to, like, if you have a reason, like a bigger picture reason why you think a gold short makes sense, okay, fine. Take a tiny position. If you think like longer term, but again, like trying to time that to the tick here, to the point, it's silly. I'm not saying you can't ever short gold. There's no reason not to. Like, again, there's ways to make money shorting gold. Don't get me wrong. But if you are somebody who's like, I know gold is going to turn around and I'm going to leverage up and this is going to be I'm going to make a ton of money. And like one move against you really hurts. That is not trading. That is not trading, because again, that's gambling. Because now I would argue, and I said this before, all trading is gambling. People don't like when I say that, but hear me out. When you go to the casino and you play roulette, you and the casino are both gambling. It is the act of gambling. When you're betting on something, there's not a certain chance of an outcome, right? However, the house is gambling with an edge. You are gambling with no edge, with actually the opposite of an edge. You're going to lose money over time. You're playing the roulette table at the casino. You are guaranteed mathematically to lose if you are playing a fair game of roulette. The house is gambling. You are gambling. They're gambling with an edge. You're gambling without one. They're managing their risk. You are not, right? Because the house has billions of dollars to take tiny bets against you and eventually wear you down till you lose all your money. That's the casino's model, right? As traders, we want to play the casino. How do you do that? Slight edge, small positions, over and over and over. Re-engineer the way a casino gambles, and that's how you should gamble in the financial markets. Again, I'm substituting gambling for something that's an uncertain chance. Like, we don't know with certainty what's going to happen ever. And the people who tell you they think they know that what's going to happen with certainty are fools. Nobody knows what the market's going to do perfectly. Nobody. The sooner you accept that, the better off you are going to be. Ivan knows one thing, that I'm handsome. Wow, Ivan. Making my day, my friend. Thank you. But a small position won't make me rich. Exactly. Exactly. This is the consensus, right? When people watch my content, there's a natural progression. People start out, they don't like me because I talk about small positions and making small gains over time and building it. And then they're like, well, that's not going to make me rich. I'm not going to get rich quick trading. They don't like what I have to say and they reject it because they don't like what I'm saying. But I've had, again, this sounds arrogant, but I'm telling you, because somebody here is going to say this, they're going to jump the curve here. New traders don't like what I have to say because it sounds like pessimistic. It sounds like I'm naysaying, I'm gatekeeping. You're not going to make a ton of money trading quickly. But people come back later. I've had many comments from years later where people are a couple years into their journey and they're like, I didn't like you at first, but now you're right. I've come full circle. And it's not me. It's not like I know all this stuff. I'm talking about my learned lessons over many years of doing this and my many interviews with very professional traders, right? Think, is it possible to make 15% a month? If you try and do that, you're going to blow up everything. If you do not believe me, give it a shot and I'll see you in a few years. Back test. That's all I can say. If you want to know if you can make 15% a month, back test 10 years worth of data on what you want to trade in a back testing software and prove it to yourself if you can make 15% per year. I'm sorry, per month. 15% per year is a good return. Most people do not like that, but they have not spent any time back testing. If you back test a system over 10 years worth of data and you find you're able to make 15% per month with modest drawdowns, send me that back test because, again, you found something that professionals have not found. Not just me. I'm talking about people who are way, way more knowledgeable about this stuff. Do not create 15% returns per month. Is it possible to flip 100 to 100K? You could at the casino just as easily as in the markets. It's about the same level of difficulty. Anyways, let's jump into some charts. I'm rambling here. S&P 500, pulling back here a little bit. Would love to see if we can get, look, the S&P 500 has room to fall here. Now, again, I am not bearish, but I think it has room to pull back and still be in a very strong upward trend. So I think you have support around the 38.2% retracement. That's going to be this FOMC day low, right? So I think that if you do get a pullback into this area, the 38.2 starts to look attractive. That's maybe your first level line in the sand for the bulls when it comes to the S&P 500. Would I buy it there? Well, I got to look because I'm not going to jump at it, right? I would love to see a little bit of a pullback here this week. And then I'd like to see what the institutional money does on the commitment of traders data report. Currently, I don't have any readings on indices, but I am watching from a technical perspective to see if this market wants to pull back. If you get a pullback and some of the macro data points improve, right? If we got, we have PCE this week. If we got like good PCE numbers on Friday, and a pullback this week, maybe there's an opportunity to join the move on the S&P 500. I like even better the 61.8% retracement. That's going to be your prior all-time highs where we broke out, right? We consolidated around this area, around 6,500, and then broke through it. I like the idea of a pullback on this one if we can get it to either the 38.2 or the 61.8%. I think this is a really strong upward trend. But have one eye on the macro, one eye on price. That's pretty much where I'm at here. I'd be cross-eyed and be like, my eyes be going like this because I got EdgeFinder on one side, charts on the other. But I'm looking for a pullback in the indices. Would be interested in joining contingent upon what the macro looks like, right? So if I'm looking at NASDAQ, same sort of story. I like the 50% retracement back down to this prior high. Looks good for, in my opinion, a pullback buy if, like I said, if the macro also sort of aligns with it. Taking a look at US 30, same concept here, pullback to 45,000, let's call it, looks good. Russell, I really like it, but would have to, again, have to get my score up on those things before I can justify getting long. Taking a look at the dollar index rejecting this area of resistance here. You have this 97.60, 97, there it is, 97.75 area of resistance being tapped into here today. Very curious to see if dollar index wants to just make a push back through those lows. Price still looks bearish on the higher time frames. You know, you've got daily charts still in a very strong downward trend. We're consolidating here. We found a low, pushed back up, have been chopping around. I think your bigger term, your bigger picture signals would be dollar would be bullish if we were to break through the 99 mark and bearish if we were to break through the 96. And what I mean by bearish is it's already in a bearish trend, but what I mean is a fresh wave of selling would probably take place if you were to break through these prior lows. Like if you were to see this break move here, likely what that coincides with is some worsening in the macro situation. Last week we had some improving macro, just a real quick nod to the fundamental analysis side of things here on the US economic heat map. We did have some improving statistics last week. Jobs data came in better than expected on the initial jobless claims last week. That was an uptick in bullishness for the dollar. We also had retail sales, which came in better than expected, 0.4% surprise to the upside. So we were expected 0.2% month over month readings on the retail sales numbers. Consumers went out and spent more than expected, 0.6%. So that was strong for consumer spending. So consumer spending was strong last week. Jobless claims was strong last week. That was most of the economic data that we got, of course, in combination with the FOMC event. We also had GDP numbers end of August come in 3.3%. We're going to get some fresh data on that this week. Forecast was just 3%. So we have above trend or above expectation growth in the economy. So, again, I know that's always sounds like gaslighting is when I say the economy is growing, it doesn't necessarily mean it's growing for everyone equally, right? Lower end consumers are hurting a lot more than upper end consumers for sure, but the economy in terms of its output is still growing. So when it comes to the state of the US dollar, I'm back to sort of a neutral positioning. I'm not looking to actively short the dollar at this time. Going to watch to see what the data points come out this week. GDP numbers, if they were to worsen, that could potentially put me back into bearish outlook. Nick, how long is the EdgeFinder discount? We are no longer doing our big sale that we were doing. That has ended. If you would like some information about payment plans or breaking it up or latest available discounts that we've got, you can send us a direct message on our website. We'll drop a link here. Actually, we'll drop the link, and also if we could put the QR code to send a direct message if that's easier for you. You can always scan the QR code that is below me to join the Telegram channel or whatever's up there, but we'll swap that out so that you can send us a direct message if that is easier by clicking the link in the description or scanning the QR code that will switch in just a second. Okay, so let's see. There it is. Boom. Look at that. Scan here or click the link in the chat. Whichever is easier if you want to speak to a rep. We do offer payment plans. I know some people are like, I want the EdgeFinder, can't afford the full thing. We do split it up. So if you want a copy of this and you're like, I can't pay the full amount, just send us a message. We work out payment plans for people all the time to make it something that's affordable so that you can start using it today in your trading. So again, send us a direct message right here or scan the QR code. Let's see. So when we go back to the dollar, again, the momentum of the chart still is down. So if I had to pick a direction, I'd be a little bit more on the bearish side of the dollar. However, I'm not nearly as bearish as I was, during this move, really. Let's see. What else do we have on the top setups page here today? Gold is still getting a bullish rating. I'll just do gold really quick. I know I already talked about it. You are pushing to fresh highs. This move has been phenomenal, and it seems like it is so overdone. But understand that when we go back in history, right, gold has these kinds of moves. And trying to time, like, look how extended this looked over here back in the 70s. Look how extended this looked over here, right? To think gold cannot continue. In the 70s, we had a move of 750%. If we talk about the 2000s, let's call it, gold had a 10-year move, 650%. What about this move? Are we up 650, 750? How far in this move are we? If let's just say history is going to repeat itself similarly, 600 to 800% moves higher in gold. Where are we at with this cycle? Well, if you went from the October lows to now, 130. Or, okay, you want to talk about the bottom in 2016 after the big run up? What about this one? 250%. You see what I'm saying? You want to talk about gold being overbought? Well, historically, these kinds of breakout moves, the last two examples were 10-year runs of 700%, approximately. 700%, we're at 250. okay, from the lowest point you could pick post the prior bull market. I think we are in a bull market for metals. I think that doesn't mean you're not going to get pullbacks. You are going to get pullbacks in uptrends, even in bull markets, right? Even in this, you had, what is that? A pullback of on the price of gold 33% in 2008, right? When the global financial crisis broke out, people sold gold. What? I thought people buy gold. Nope. Remember, we talk about this often with gold prices. When you get a recession and panic, people sell gold. Why? I thought gold was the safe haven. They sell gold to raise cash to cover their debts and losses in other areas. That is what usually happens. You get a stock market sell-off, you get a gold sell-off too. But if you know your history, what typically happens when you get huge sell-offs across risk assets, gold tanks to short term, and then people buy it aggressively. Why? Well, picture this. If you had a portfolio, right, that was leveraged, let's say you're a hedge fund and you have a leveraged portfolio where you're very long stocks, you're very long crypto, you're very long real estate investment trusts like REITs. Let's say you're long gold, you're long Ethereum, right? You have all this stuff in your portfolio for clients. Let's say you have $500 million that you're managing for clients, right? Okay. If everything starts falling quickly and you are leveraged, meaning you're borrowing some money, like you're really invested. If you need to pay back your debt, if you need to undo some of this leverage that you're in to de-risk, what do you grab first? We have to sell stuff. Well, if gold is up, sell gold, get some cash out of gold, right? Do you see what I'm saying? That is what usually happens. Now, if you're ready for it, I did really well in 2020 with gold. I did really well because I knew the history of it, right? In 2020, we saw the same story. Everybody panicked. Everybody sold everything. Gold had a quick move lower in 2020. And you can see how quick, look at this. This is a monthly chart. Gold dropped and just immediately rocketed, right? Now that was a great example. You can barely see the 2020 sell-off in gold prices because it just went boop and then jumped. Is gold overbought here? Sure, but gold can stay overbought for a decade if it wants. Again, a fool's game is trying to call the top in gold. It goes up over time. Don't fight it. That doesn't mean you should buy it right now. Again, I think metals look stretched, but you give me a pullback in metals, I think it's a buying opportunity in the context of a bull trend. Now, specifically, not really what we talk about on this channel, but if you give me a pullback in metals, I'm probably going to buy gold miners and silver miners because these companies can move ridiculously hard in a bull market for metals, right? They're actually almost like a leveraged play on gold because they mine gold. They're sitting on huge, land plots for mining gold. So anyways, metals, the spot price of metals is one thing. Then you also have gold mining companies, which can be traded or bought and sold, etc. Anyways, U.S. stock market opens up in about 5 minutes to go here. Real quick, I have all the time people asking me, hey, Nick, can you do a fundamental analysis breakdown on this? Can you look at this chart, etc.? One of the easiest ways, and one of the easiest ways, essentially, to stay up to date with fundamentals for free is to make sure, take a second, guys, to join our Telegram channel. I'm telling you, if you are serious, like if you're listening to this, you're like, I get this. I want to be more fundamentally prepared. I don't want to be blindsided by market sell-offs. I want to know what the strategy is fundamentally. Learn your history. The reason I got so into fundamental analysis was because I love history. Like I'm a history nerd. I love learning about like the Roman Empire and like ancient civilizations. I just love that stuff. Well, I also love markets. And I combined my two great interests, and that led me to understanding or wanting to get into macroeconomic studies, because then you can actually define why did markets move a particular way. And once you dig deep and start learning macroeconomics and fundamental analysis and how it impacts markets, it's a superpower. You're prepared for different market moves. You know generally how to trade and what to trade in certain market environments. If you are still in the process of learning fundamental analysis, which by the way is all of us, including myself, right? I still have much to learn. We all do. The greatest way for you to learn fundamental analysis for free, I am telling you, join this Telegram channel. There's a QR code right here. Just take your phone if you're watching on a TV or computer or whatever, just scan it right there and join our Telegram. It is completely free to join. We are posting research all the time. It's free. You do not have to spend a dime with us. Just come join our Telegram, learn for free. I know we do these live streams and videos, but sometimes life gets busy. You still want to continue to learn, but you don't have time to watch a 30-minute video. I get it. Join our Telegram. It's free. Yeah. We had a question in the chat. Somebody said, piece of advice for a 16-year-old trader. Genuinely, I mean this wholeheartedly. Get a job, take it seriously, build capital, and understand that trading is not, it is not, I'm not trying to sound like a naysayer, but trading is not a job for a 16-year-old. You need capital, and capital takes time and years to build. So do not disband the idea of, like, I started out in software engineering. I loved trading the whole time that I was learning software engineering at college. And I leveraged the two things together. Like I build software, like you see me doing this, like this software, I got a degree for software engineering. And I combined it with my love for interest or my love for markets. Like I combined those interests and leveraged what I learned about software engineering, and I worked a job and I saved up capital. Like, use other skills to build your trading career. Everyone on social media will tell you, you know, I'm an 18-year-old that made $1 million from the markets. And what they're not telling you is they probably sold a course. And there's nothing wrong with selling courses if you have verified results. What's super cringe is a lot of people who are selling stuff on the internet never show you any live trading. They never show you any of their portfolio. They don't show you their account at all. Now, the claims going from broke to millionaire in trading is so ridiculous to people who know about trading. Look, you can make astounding amounts of wealth in your trading, but it's not going to be a year process. It's going to be a lifetime. Like you can get incredibly wealthy trading and investing in financial markets and building that skill. Don't let anybody tell you can't do that. But what you certainly should not fall victim to is thinking that you can do it in a year or two. Like, that's not how markets work. Nobody knows with that much precision what the market's going to do. And if they did make those kind of results in the markets, there's a good chance they had some sort of really lucky call out. Like, for example, they bought Palantir at like $6 a share and, you know, leveraged their whole family's credit cards on this thing and got lucky, right? There is luck in markets too. Again, I'm not discrediting people who have made it in trading, but there's also like one trick ponies. There's people who bought Bitcoin in 2017, would put like all their money into it and did really well. They're not necessarily great traders. They hit a really big streak and got lucky. That happens. Consistent, approachable trading results that everyone in this stream can achieve are slow, steady, practical, learn the skill, build it over the years. That's what we're here to do. I can't teach you. Well, first of all, I'm not really here to teach you. I'm just sharing what I'm doing, right? Like, no one can teach you how to create magic amounts of money from the markets consistently, because the people who have done that, most of the time, it is a stroke of luck. Now, all of trading is a little bit of luck. Like there's always the, you know, like the silver trade that I caught, even though I'm no longer in the trade, my timing was pretty good, but I would call a little bit of it luck. Like, I got a really, really good entry on silver prices when it was pulling back. You know, I bought in like right there, right before it ripped. And was it luck completely? No, but there was a stroke of luck that came into that trade, right? Like I got a great entry beyond better than I thought I was going to get. And I didn't know, I wouldn't go around telling you on YouTube, yep, I knew it. You just got to buy my course and I know exactly how to recreate that kind of trade every single week. And the course is $10,000. Like, no, that's like, I wouldn't, that would be dishonest to say, like, I know how to create those trades all the time. I don't. I know how to eventually catch those kinds of trades periodically. And I can do that repeatedly over time, but it's also going to involve losing streaks, drawdowns, false breakouts, getting trailed out right before it runs. Like, it's going to happen, right? So that's the thought. So no Range Rover. Look, take the funds that you would have bought a Range Rover and just keep them trading and investing. Like again, avoid withdrawals. Do the opposite of all the social media gurus, and you're probably going to be better off. Trading is hard, not easy. Don't withdraw your money from the account every time you make a profit. Keep it in there and compound it and grow it. Like technical analysis only may work for a very few select number of people, but in my opinion, it does not work for most people to just draw lines and support and resistance levels and think you're going to have some huge edge in the markets. That's a reality check, hard to swallow and accept, but it's, in my opinion, the truth. Technical analysis is great. It has its place. But if you're just blind to what is really driving markets, interest rates, the Fed, why do we all watch Jerome Powell speak? Is it because technical analysis is the only thing that matters? No, it's because fundamentals matter. Why do we look at job statistics? Why do we all gather for big NFP and CPI events? It's because those things matter. They move the market. That's what drives prices. So why would you not learn what drives prices and understand what might be coming next with those things? That is why we do what we do. That's why we study macro. By the way, another free plug for you guys. If you're interested in trying the EdgeFinder for free, we do have a free version now available on our website. Now, it is limited and it's a way to explore the tool, but there are some useful features that you can start playing with and learning from with the EdgeFinder free demo version that we now have available on our website. If you would like to try out the EdgeFinder, we'll drop a link here in the chat. And also we can actually have the QR code. I think we have a QR code for that as well. But yeah, you can scan the QR code, you can click the link, whatever, and get access to the free EdgeFinder version. There it is. Boom. 30-day trial. You can either get access to our 30-day full knocked trial, or you can scan and get access to the free demo version available on our website. Again, if you are looking to learn fundamentals, there are many free resources on our website. We also have, we're just throwing free stuff out there today. I'm telling you what, guys, we have put so much work into this website to make it useful to traders for free. Of course, you can purchase our stuff too if you want, but I would highly recommend, honestly, if I could go back to zero and start over and just learn trading, go to a1trading.com. There's tons of course material. We have tons of fundamental analysis, technical analysis, risk management, stuff that works, stuff that's proven by real results. You can also find broker and sign up discounts for prop firms. We have indicators available, both free and paid. We have signal services. We have the stock box. We have the EdgeFinder, so on and so forth. Head over to a1trading.com. There's a ton of stuff for you waiting. Many free things, some paid, of course, but totally up to you. You can also keep up to date with our, I think we're live, like, yeah, there's me. So we built this little thing here, which is a live embedded version of the stream on our website, which is awesome. You can also keep up with our schedule. In just a second, we've got Ivan coming up next. So we'll go ahead and throw the stream over to Ivan FX. Of course, if you're interested in one-on-one coaching, stick around. He also does offer 1 hour. I believe he's doing some consultations for free right now. So if you are interested, find him on his YouTube channel. We will drop the link to this. Stick around though, check him out, listen to some of his commentary, and he's coming in just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Now, That is true, Nick. It is very true that I do offer 1 hour free hour to see, just to help out, see how things goes in your trading. If there is something to help, I'll probably do. And what generally seems to be the case is people seem to leave the meeting quite not confused, but their brain is full of information that things they've never thought about. And now they have to redo and rethink whatever shit they're doing in the trading. Because I really try to push you hard, not that hard, but hard into reviewing, into understanding, and building your strategy. That means you need to consider many things that you probably haven't considered before. So whoever has been in those meetings before, please give you a feedback. I don't know, it might be bad, but I know I give 100% in those 1 hours. Um, Nevertheless, this morning I had a bit of a Aussie yen trade on. It was mentioned a week ago or so that I believe this week would be bearish on the yen pairs, and secondly, we had a weekly planning meeting yesterday on the link was found in Discord, and I said, okay, if price comes up to about 97.70, I'll say I'll take it. I'll down to 96.83. Now, that is my personal trade. You do whatever you want to do. I'm just showing you what I do. Um, and I really, so not financial wise whatsoever, but I also wanted to do New Zealand. I wanted to do Euro. I wanted to do CAD. But we all know how I trade. I don't take setups that doesn't fit my criteria. So this isn't bearish. This is very bearish, and the entry should have been about 87.50. That's about 90 pips away. So now we will take that another day. This is notes from the meeting we just had about reversals of reversal of trends. So if you are in Discord, very much encourage you to look when the recording comes up. So dollar, me. I said yesterday that I believe dollar should rise this week. Now, why would it rise? Why can it just fall? Why did you make that decision, Ivan? Well, it is because of the Fed and the market reaction to the Fed, and we have a pullback. Well, a pullback can last a week or two. If we add seasonality to the mix, we probably should start falling from about 1st of October. And today is not 1st of October. And I can be completely wrong. But I've done this a couple of times, a couple of years. And secondly, and thirdly, I don't feel confident in the current technical chart that would say this is a great place to sell. How does a great place to sell like? And how does a great place look like? Well, more than anything else, to me, it has to look something like, I don't know, something like this probably. We have an uptrend for some time, we have a full reversal, and then I can probably take that short or that short that never happened. Now, that's our number one trade and number two trade. What is number one? What is number two trade? Number one is the first pullback. Second one is the second pullback. And I try to take the number two ones because I generally have 70% win rate there, or sorry, probability of making some sort of money. Here, only 50. And on the third pullback, which probably becomes, yeah, that one down there, I have about 30% chance of making anything at all. So I won't even bother. And as you can see, it went reverse higher, and I didn't really show that previously in the meeting. Like what happens to when you sell the third pullback? It generally is it's a time where things actually just goes absolutely reverse on you. So that is that. So to me, I trade yen pairs. Why do I trade yen pairs? Why not dollar pairs? Sorry, why not euro pound? Why not everything else under the sun? Why not gold every single day of the week? Now, I have not been a part of this absolute rocket ship. And I have said for a very long time that I appreciate gold going higher. I believe gold should go higher. And I prefer a pullback. And that is to safeguard my capital, my sanity. And I know that I did something great this week, that I waited and I waited and I waited and I waited. Now I wait. Gold has gone higher. Does that make me a bad trader? Not really. What I generally say in a meeting with you is you will never be paid in dollar amount for the times you stepped over a trade that you were not supposed to take. But that's when you have to be very graceful to yourself and say, hey, I actually did well. I actually did not take a bad trade. I actually avoided a bad situation. My market analysis was so great that I avoided a loss, and that requires a chocolate treat. Now, the other thing that I really want to, as long as you're not logic, and the other thing that I generally do say to you is, what have you previously done in this situation? How do you handle it currently? How should you be handling it? And those are generally two different worlds. So for me, this is a no-go zone. I have looked at it for 10 seconds and said, okay, cool. Let's come back tomorrow, see if there's a pullback, see if there's a better setup. And if I were to say anything at all about when I should have been trading, should have, could have, would have, on all those, if I were to zoom back and I had a time machine, I want to go back to 2022, about September 2022. What happened in September 2022, you might ask? Well, if I go to, I don't know if I can, is this the right place? No, not really. If I go back to 2022 and I go back to US, economic inflation data, CPI year over year, and we go for the American one, you only go back to 2024, fair enough. It was the fact that inflation in the United States of America peaked at about 9.1. And you would argue with yourself, well, why would you buy then? Because that marks the time for gold to go higher, dollar to go lower. And how do you know that we're supposed to be the situation you would have done again and again and again? Is because the market showed us, the economy showed us that when we have three or more data points, this is CPI out of America. I wanted to use EdgeFinder, but fair enough. June 2021, 9.1, July 8.5, and August posted in September 2022, 8.3. That is two. And then the third one comes September, posted in October for 8.2. You have three now consecutive falls, and then October 2022, 7.7. That is when you see the dramatic fall in dollar and gold goes higher. That was about 1640. Now we have doubled. So if would have, could have, would have was a time machine, that is what I would have done. And right now, we are nowhere near a reversal of trend to the upside. So I'll pass. I'll leave it on and go into the next one. I saw pound was requested or mentioned in chat, and I said, okay, what about strength? What about dollar strength? Where are we supposed to be trading here? So again, we go back to what I previously just mentioned in the VIP webinar group. I say that is number one, and that is number two. Are we close to anything of those? Absolutely not. So I am not legally, but by my trading standards, I'm not allowed to touch pound. And that is for this week. And now I hope that by sometimes next week, this one does that, and then it turns higher. then I would be more than lovely to be looking for a buy. But this is just a short-term volatility move, just a short-term bullishness move on dollar, not really driven by fundamentals. It's more driven by money flow, people taking profit, and yeah. And if you were to really argue with me, that would be the sell place to sell. But again, if you try to sell those, I can guarantee you, if you do by my probability, it is about 10%. Hi, Evan. I pull out. Here's a What about the German DAX? Now, that is something I have absolutely zero trading experience with. And I can only say to you very briefly that I believe it should go higher. Why do I say that? And it is bearish. Because that's immediately what goes into my head about going into October in a year of 2025. If I go back to, let's say, how much far? Only going to go to December. Okay, that would not be great, but would have been great if I had that as well. Is there's another one? DAX 40, DAX underlying. Yeah, about there. Okay, so if I say from about October or so, that would be there, and I say until next year or so. In this case, it was before 2025 at least. Sorry, before March. But I would also say May. That would be the bottom or so. About there, actually. And you'll probably be left with last year about 23%. So to me, bearishness on the DAX, the German 30 or the 40, is absolutely fantastic. Would be great. Lovely to see. I would just say, just wait for the bullishness. And if it comes now or later, I don't know when it does come, but generally, we know that European Union pledged to spend about 800 billion euros on defense. We know that they have stabilized their economy in inflation, that they are not going to cut anytime soon, and they are nicely about 2% inflation or so. So yeah, they're about good. I would believe that the what do you call it? The French one, the European one, and the FTSE and the S&P 500, generally speaking, should turn into some kind of bullishness about October. Now, for S&P 500 and me, we are no longer friends. We are no longer in the same business because, hey, trading this one is absolutely diabolical. Very fun to be a part of, to see that it goes higher and higher and higher. But I see the 401k going higher for those who has that. But no, trading wise, no. And that's how I want your process to be. Be very specific, be very direct, be very confident in what you need to say. And sometimes you get some some falls here and there, and you say, okay, is that where it's supposed to be? Now we have an extra situation where labor market came in much lower than expected for June, July, August, which has sent the market higher. That wasn't there last year, but give or take, you still cannot break your rules just because there's a different variation this year. And if there's one thing for certain, is that a pullback is going to come, and I just don't know when. Is it next year? Is it 5 years? I'll probably be gray by the time I have waited enough, but there is that. Can you buy the high? I've tried that too. There's about 30% probability of doing that, so I'm not going to do that. When I mention yen pairs and probably pound yen, there is also going to be a breath of the inflation in the UK right now at about 3.9 or so, which is one of the higher one in the G7 countries that we're trading. That is dollar, CAD, euro, pound, New Zealand, Aussie, and CAD. So, and Japan, sorry. And okay, they are one of the higher ones. Okay, that would mean bullishness, wouldn't it? Yeah, and it needs a bearish companion. So I don't feel like shorting this by any chance or any means. And looking for a bullishness on it is, I would be more than happy. But again, if we are going to be for this week and next week be dampened, also, I mean, if it does make a higher high, higher low, then your trend is your friend, isn't it? And you should take that trade probably if it fits your trading rules. But one thing else, I would wait. Let's see tomorrow. Let's see next week if this one turns around. So right now, I would argue it is about in the middle. It's about 50-50 where it's going to go next. I don't have a probable cost. I don't have a probability of what this situation should give you. And the reason is very simple. It's a bit of a range bound. It's a bit of a low in the range bound. And just by taking a trade right now, not necessarily, but if you think, okay, it's about 140 pips up to the previous high, it's about 170 down to the previous low, or 120 down to a support level that I would love to buy around 198.50 about next week, then right now it's not really the greatest time and the greatest place, because there is better opportunities. And I really want you guys to, when you are looking for a trade, waiting for the market, looking at the technicals right now. Somebody said earlier, why do you do fundamental analysis? Because the market does whatever it wants to do anyways. Okay. Do you know what it does? Do you know what it does before I do that it does it? The whole reason behind the fundamental analysis, and I say, yes, that's a buzzword, but what you actually are supposed to be analyzing and looking into is what drives price, what drives the market, what eventually is driving it, and is it technical, is it fundamental, is it seasonal, is it sentiment, what is it? It doesn't matter what it is. But if I have identified 5 kind of drivers of the market, is risk, is geopolitics, it is macro, it is seasonality and sentiment. If those are the major drivers or major reasons of market, and if banks or hedge funds or whoever's trading this market that is pushing you around like you are the buoy, then you should also be looking into those reasons. And they shift in importance, they shift in volatility, they shift in, sometimes is very important, and the next day is not really that important. Okay, so how do you now swim through that? And Nick and the rest of the gang answer to that is fundamental. And what is fundamental? The slow growing reasons of why market would go in a direction over time. And I have said for some time that gold should go higher. And I have been right about gold going higher. And that's the only thing I can claim. Why? Inflation going lower. Inflation being low. Or in this case, labor market going lower. Weakness in the US economy drives gold price. That drives dollar lower. That drives Euro, Aussie, New Zealand, CAD higher. Has nothing to do with the European, nothing to do with the Australian economy, but because their trading, their income, their iron ore, their pharmaceuticals, their airplane parts is priced, and their oil and their commodities is priced in US dollars. Therefore, they're very they're very exposed to US dollar, and whatever the dollar does, they do opposite. And you can look through my statement and say, okay, when dollar was strong, all the other currencies also had very high inflation. But why on earth was Australian dollar, US dollar depressed? It wasn't even moving higher. Why wouldn't Australian dollar, US dollar go higher? The Australian had a high inflation as much as US had. UK had a higher one than America, but for some reasons, it was going lower over time. So again, relative strength compared to who is the biggest brother, who's the ones who punches the punches, by the end of the day is dollar. So you can say to me, why? And I'll answer, well, it is because they have the most domestic, the most robust economy. They are not depending on any other country, like Europe, like America, like Australia, like New Zealand. And since they're so self-dependent, and since their economy is so strong, rightfully so, they punch euro down the toilet every single week if inflation is ever so slightly the same. And you will see euro not really doing anything. And when you look at a euro dollar, which is 80% or something in that direction dollar by the end of the day, when we see weakness in dollar, euro dollar goes higher. Why? Well, they are stronger. And that's the market dynamics. And why would that be the case? Just gave the examples, but it's because the major trading partner for Europe is America. A lot of money is going back and forth every single day. Now, for me, am I looking at dollar? Am I looking at your dollar? Yeah, I look at that first, and then I see how big of a difference is it to Europe. If Europe is stable and pretty much okay, I'm just going to say, okay, whatever your dollar is going to do opposite of whatever the Fed thinks it's, whatever Fed's opinion about the economy is, which at this point is weaker labor, elevated inflation, and moderate growth or something in that direction. Okay, that means the dollar weakness from long term. So I'll stay dollar bearish then for some time. Can you look at GDP? I just look at pound yen, and I had a glimpse at pound dollar, and I said, I don't like it. It's a bit of, well, did I look at pound dollar? Yeah. I don't really like it much at the moment, so I'll stay in between. And as much as I want dollar to fall, we currently have a short-term little bearishness, and in that moment, I'll leave it alone. But I also believe that dollar should strengthen this week, so that we can get a better entry next week. One that has a central bank meeting this week is, of course, Switzerland. So there should be some volatility on those on Thursday, and I really hope that by some magical parts that I don't really think is going to happen, but you never know, is that Switzerland should go into some kind of quantitative easing, some kind of support, some kind of bond purchases, something, and that would send the absolute living life out of Switzerland down. And I really hope that could happen, because based upon the economics at the moment, it is almost no growth. There is almost no inflation. Their interest rate is at zero. There is no reason for this to be weak other than weak. And how do you create growth, and how do you create optimism again back into the economy? Because it's just the economy doing the economy things, and it's been dragged down. So it needs a bit of, in my simple opinion, it needs a bit of extra help to get across and starts growing again. And how do you grow again? You add some more juice to the economy, some more money that leads to depreciation for the short term for Switzerland, and then we can go higher. As I said, low growth, like almost nothing. CPI 0.2, PPI negative 1.8, unemployment rate rising, and no change in the unemployment, and very low retail sales, and services still hanging on there. Manufacturing is actually coming back up again, because I was remembering it was 48. But at the end of the day, it's up to the Swiss National Bank on Thursday to come up with something genius. And then if they do so, then this should go higher. It will continue higher. And if they then announce it's going to be a spike higher on spike lower on Swiss dollar, Swiss would go higher, and then more times than often, that's going to continue. So again, whoever sold the gold rally, I saw some admitting that whoever sold the gold rally should also not be selling the pound, the dollar, Swiss, or any against the Swiss rallies, because when you have a new monetary policy direction, a bit more accommodative, trying to do some bond purchases, some ETF purchases, is definitely not going to stop at the first moment. It's not a news event that is easy biz lemon squeezy jumped over. It's gonna take some time for that to be priced in. And for those who's wondering when this thing's being priced in, that's the moment it's being priced in, and continuously to be priced in going forward. Sorry, I don't know why I held my breath there, but you're New Zealand, as I said earlier, what had been yesterday, that I believe your New Zealand should go higher, but in this trend, we're about 400 or 500. We're about 400 or 500, 450 pips, a bit too late. And if you remember my reversal of trend, where do I want to buy? I want to buy there, and I want to buy there, and then nothing else after that. So we can take it later, Max. Aussie yen going lower, Euro yen, I don't know, maybe going lower at the moment. Pound yen, New Zealand yen, dollar yen. Nah, okay. Aussie yen at least is going how I want it to go. And if you want to get the free 1 hour, the link is in Discord in the VIP webinars. I hope you have access to that. So, and the spots for this week is filling up. Next week, I'm not available. So if you need my help, it has to be this week. And in those meetings, I'm absolutely 100% doing my best to try to help you becoming a better trader. I've done that to many, and I'll continue doing that going forward. So until next time, stay safe. Don't do a thing I wouldn't do. And boom. Love you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I do hope everyone is doing well. And yeah, let's get things started. So let me share my charts. They should be on here. Quick recap of all of the trades I currently have open. So Aussie CAD around break even, Euro GBP about to hit the take profit, so closely approaching the take profit. Euro CAD going back to break even, USD CAD going back to break even, and then USD yen is sort of an experimental trade that I didn't share in the A1 Discord because it's not a part of my general strategy. So yeah, 4 positions that are shared in the Discord and discussed in the Discord. Main story for today is gold and silver. So these things are just continuing to crush to the upside with massive momentum. I think there was some Russia news, some Russia breaking news that may have shook the markets a bit, and of course, kind of shifted the markets possibly into risk off. And risk off is good for gold and silver. So far, every single confluence is pointing for a bullish gold and bullish silver. I'm looking for buy setups. Will I get a pullback because I don't want to buy the all-time highs? I'm not sure. I'm not sure about that pullback. Things are looking a bit overextended, yes, but we seem to be just continuing to push to the upside. We can get something like this or like this, where we never just touch that 20 MA, or like this, which can last for 60 days, 70 days, 80 days. A bit of a problem. I'm a bit disappointed that I kind of missed the entry and that I didn't manage to get in on the breakout, but part of the game. You trade and you learn, you adapt, and you improve for the next time. So it is what it is. I do have some other positions, but I would very much like to see these things pull back a bit. You know, if we can pull back to some support levels. For gold, I'm looking at 3,500. I think that would be an acceptable level, if I'm being honest. For silver, I'm looking at maybe like 40.5, maybe even 41, something like that. It would be a nice round number. It would be also around the 20 MA. So alerts are set, and now I'm just waiting, being patient. As far as the news calendar goes, last week was pretty dramatic. So last week we had a bunch of stuff, a bunch of central bank meetings. The biggest one was, of course, the Fed. They turned out to have a hawkish cut. So there was a cut of 25 basis points, but the tone of Powell was hawkish, which made the DXY gain some value, right? So it made the DXY gain some value, which was pretty unexpected out of this level. So I think a lot of traders, a lot of investors were short, and they were looking for the DXY to break 96.4. That didn't happen. We broke and rejected, quite heavily rejected. So I'm sure there was some sort of a short squeeze happening in this price action, some sort of a short squeeze. And this week, as far as the news go, so we don't have much interesting news. I mean, we have some numbers coming out, but we don't have any central bank meeting. We don't have NFP. We do have Powell speaking, so that could be a bit interesting. But other than that, just regular data releases. So we will see what will happen out of that. The next big event I'm looking at is going to be NFP. Actually, we do have CPI and PPI. I think we should have them. No, actually, the next big event is going to be NFP. Yeah, NFP is going to be the next big event. So that is what I'm closely watching. Let me check the comments. So, hey, Ballout. Hey, Slugmeister. Bro looks like Rasputin. Okay, that's pretty funny. I've never heard that one before. Random Oz guy is crying with the Aussie CAD. Let's see. Aussie CAD. Aussie CAD. Well, why are you crying? Did you sell here, or did you buy here and now it's at break even? Did you buy on the top? So if you can tell me more about your struggle, maybe we can help you. But I do have a position open. I'm heavily bearish on the CAD. I think Canada is in big trouble. I think Canadian economy is losing a lot of steam. They're getting some bad fundamental data, which I always show here on the EdgeFinder, but I can bring it up again. So you can approach the EdgeFinder with two ways, let's say. So you can look at the short-term economic data, which would be the eco surprise meter. So for Canada, I think both the short-term and the long-term is pretty bad. See? Whoa, very bad. So we had retail sales. We actually had PPI that came in cooler than expected. Okay, so interesting stuff. So inflation came in a bit cooler. That would be bearish. So only 12.5 only 12.5% of the data is coming out bullish for the CAD. So this is short term. Now this is great, but what I also do is I scan for the long term. What are the long-term trends in the data? And that's going to give you an additional edge. So if you look at the three key metrics, that's going to be GDP, which sucks. It's very bad. It's negative. We have the unemployment rate, which is even worse. Definite uptrend in the unemployment rate. High unemployment rate, 7.1%. That is problematic. And you look at inflation for the CAD. Let us take a look. Around the 2%. So not a lot of room to cut rates because inflation could go above the target. But now with a bit of cooling inflation, we could see some more opportunity. But anyways, we're kind of close to 2%. So if you cut rates, maybe inflation goes up a lot. So every single number is not looking the best for the CAD. And then if you look at housing data, housing prices, you're going to see that in Canada, housing prices are going lower. So they're kind of not crashing, but they're in a definite downtrend. Lower demand for the CAD, for housing, means lower demand for the CAD as a currency. So both the short term and the long term is looking pretty bearish. And I'm expressing that trade idea through Aussie CAD long, Euro CAD long, USD CAD long, and I'm spreading out my risk. So if you combine all of these three positions, it's like maybe 1% risk in total, but I'm spreading out the risk because USD CAD positive swaps, Aussie CAD positive swaps, Euro CAD negative swaps. So it's kind of a game with swaps. It's also a game with which currency is the strongest. And I think it's good to have multiple CAD shorts running. So I can keep these running for 2 to 3 months and I wouldn't mind. Okay, so more, let's say, long-term positions. As you can see, my stop loss is below some key levels. So for Euro CAD, it is below 1.6. For the Aussie CAD, it is below 0.9. And these are all psychological levels. These are all round numbers where the price likes to reject. That is just the way the markets work. That is the way the humans work. Well, who is trading, who is actually executing buy and sell orders? It is humans. And humans like psychological levels. So for sure, there's going to be some buy limits set at 0.9. Okay, just the way the markets work. If you're interested in the EdgeFinder, or if you want to get these trade signals, if you want to join the A1 Discord, definitely you can use my discount code, which is MARKO, and you can get a nice discount on both the EdgeFinder and on the A1 Discord. So I highly urge you to take a look, because you just saw how I built a story, both a short-term story and the long-term story, why I'm bearish on the CAD. Right now, according to the currency scanner, for the dollar, I'm maybe a bit bullish, but more neutral. For the pound, heavily short. For the CAD, I'm heavily short as well. I think the two biggest fiscal sinners, you could say, right now is going to be number one, CAD, and the second one is going to be the pound. Okay, both are getting some very bad long-term fundamental data. Euro kind of bullish long-term. Yen neutral. Haven't done much research. New Zealand, haven't done much research. Aussie, I'm bullish. And the Swiss, I haven't done much research. So that's my long-term bias. This is short-term. So this shows you the short-term bias, which takes into account only the most recent data prints. So I'm looking at the most recent data prints, but I'm also looking at the trend. Where is the data going? For example, the US NFP is in a downtrend. So that tells you the labor data in the US is not looking so healthy, is maybe struggling a little bit. Okay. Let's see. Let's see. Let's check out the comments. Which color is your jet ski? It is blue. Long at higher price and it keeps going down. Bought at 0.911. Let's see. So you bought Aussie CAD at 0.911. Hey, as long as you have a stop loss set, hopefully you have a stop loss set, you can get out for a controlled risk loss. So make sure you do have a stop loss set. It was just one trade. If the probabilities were there, if it fit your plan, then you did everything correctly. Just make sure you manage your risk and you get out when it is time to get out. Cat Swiss sold at 0.57. Looking forward to add more shorts. Yeah, Cat Swiss could be a good play to go short. What do you think about Bitcoin? Is Bitcoin moving? I haven't really checked crypto lately. I mean, whoa, Ethereum has a big down day today, minus 5.33%. Bitcoin just kind of dancing around this level, being range bound. To be honest, I did some research, and according to the halving cycle for Bitcoin, there has been, I think, 3 halving cycles so far. And during this period, this seasonality is bearish. So this period of the halving cycle is usually bearish for Bitcoin. So currently it's being reflected in the price. I'm not sure why the Nasdaq just keeps trucking higher while Bitcoin stays flat. That is a bit of a surprise. I would think if people are slapping on massive risk on positions, they would get some Bitcoin, but looks like that is not the case right now. And Ethereum is just flopping, also kind of ranging around here, but starting to break out lower, maybe. Look, Ethereum had a massive run. So Ethereum had a massive explosion to the upside. Big reason was, if you know about Palantir, if you know about Saylor, what he basically did, he was the first to do it. He used his company to buy a bunch of Bitcoin, and thus the price of Palantir Technologies, the price of Palantir exploded to the upside, okay, with the price of Bitcoin. So yeah, what I want to say. After this, a lot of other US companies started to copy Palantir. Companies like, I don't know the name, but it also made the price of Ethereum skyrocket, especially in May, June, and July. This was the period when this buying from US companies was the hottest. That's why you had this massive explosion. Now, is that sustainable? What it basically means is US companies are artificially inflating the price of their stock by buying crypto, and probably you get like 2x leverage. That means if Ethereum moves by 2%, that specific company moves by 4%. Okay, so you're getting an even more volatile product. And from my research, these companies are pure crap, so they don't make any money, which means they're gonna drop pretty close to zero very soon. And with it, they could drag Ethereum, or Ethereum could drag the companies with its price. But I'm not that bullish on Ethereum. I think this whole buying from US companies is very unsustainable. I don't think this huge uptrend can continue for long. We did pierce into the all-time high, as I can see here. And I think we're just going to be flat or maybe even sell off. So for crypto, I don't think it's the hottest thing right now. I also don't think that Bitcoin is good replacement for gold. As you can see, gold is flying because the current market condition is great for gold to explode to the upside and to absolutely fly. I'm talking about inflation. I'm talking about bad NFP. I'm talking about rate cuts. Trump, a big, beautiful bill that's going to increase inflation even more. More loans being issued out by commercial banks, which creates artificial money into the markets, pushing inflation higher. So you would think if Bitcoin is digital gold, why is it so flat during the market condition where inflation is the biggest concern for investors? We can see that because gold is flying. that means that Bitcoin is still pretty much a very risk-on asset. Now, what is cool is that you do get some diversification because it's not moving with the Nasdaq, it's not moving with gold, so you can at least get some possible diversification. And you had some good performance in the beginning of 2025, where Bitcoin didn't lose a bunch of value, and in the end, it ended up going higher by a nice percentage. So interesting stuff, but the conclusion would be right now, crypto is not on my radar. I think there's better opportunities out there. Also bought Aussie CAD at 0.9 level, not looking very good. I mean, depending on where your stop loss is, for me, this is really more of a long-term position. As you notice, I have my stop loss below 0.9, but you bought at 0.91. Okay, so you bought somewhere here. Yeah, depending on if it's a short-term or more of a long-term setup for you. For me, this is more of a long-term setup. I have a pretty big stop loss, 110 pips. I don't care, I don't mind if this position ends up running 2 to 3 months, because it is positive swaps. If you go to the EdgeFinder and go to the carry trade scanner, see, if you buy Aussie CAD, you get paid positive swaps. That's always nice. That means if I stay in this position for months, I won't mind, because I'll keep collecting swaps. It's not much, but at least I'm not paying to be in the position. At least I'm getting paid to hold the position. What about CAD yen? Okay, CAD yen. Let's see, CAD JPY. So for CAD yen, I would say there's better opportunities to short the CAD. I think shorting CAD yen could be pretty expensive. If I check the carry trade scanner, let's take a look. CAD JPY. Yeah, you're going to be paying negative swaps. It's going to be an expensive position. For the yen, I'm not that bullish, if I'm being honest. I'm very bearish on the CAD, but I think there's better currency pairs to let's say, express that position. CAD yen, I don't like a lot. I think it's kind of flat here in terms of technical analysis. It's not really moving anywhere. And again, if you get stuck in this position, if you get stuck for 2 months, the swaps are going to be pretty high. Trust me, the swaps will eat you alive if you're not careful. Which currency has the worst inflation on the EdgeFinder? I would say it's the pound, if I'm looking at it correctly. So it may not be the highest, but I can guarantee that the pound has the biggest issue with inflation right now. It's around 4%, 3.8% and rising. So look at the uptrend. There is a very clear uptrend in the data. And I would say the pound is facing a very problematic scenario, which is stagflation. That means bad growth. That means bad employment. That means high inflation. That's a scary scenario for the central bank. They can't cut. They can't hike rates. So, whatever they do, it's going to damage one aspect of the economy. If you fix inflation, labor suffers. If you fix labor, inflation suffers. That's why stagflation is so hard to fix. Okay, we have quite a lot of opinion, quite a lot of comments. Any opinions on oil? Not really. I tend to stay away from oil. I think it's chop fest. I think it's heavily impacted by geopolitics, Israel and Iran, US and Russia in general. So even if you do have a fundamentally sound and technically sound position, you can still get some sort of breaking news that screws up your whole trade, maybe even takes you out for much more than you risked. Also, I don't see a specific uptrend or downtrend on this chart. So I find things like gold, silver, Euro GBP, Euro dollar, USD CAD, right now a lot easier to read. And to be honest, in general, a lot easier to read and easier to trade. Oil, I think it's hard. I think it's hard. I don't think my edge is that good. So why trade it? If you have a different edge, if you have a different opinion, if you have different data points you're looking at, then maybe it works for you. Okay. So I want to take this time to comment or to mention today's sponsor, which is going to be DNA Funded. Okay. So if you're looking for a prop firm, if you're looking to expand your trading capital, we highly recommend you check out DNA Funded. This is my challenge account. I'm using it to test out my ChatGPT signals series, where I basically ask ChatGPT to give me a trade signal every single day. So I currently have 2 trades open. To be honest, I really like their platform, Trade Locker. It's so easy to use, very easy to execute trades. And one thing that it does, which is pretty cool, is it automatically calculates your position size. So if you want to risk 0.5% or 1% or 1.5%, you just input the percentage and you automatically get the lot size. Most other platforms don't do that. MetaTrader doesn't do it. CTrader doesn't do it. DXTrade, I don't think it does that sort of stuff. So Trade Locker is actually quite a good surprise, and it's quite easy to set up a trade. Again, DNA Funded, reliable prop firm. You can get 25% off by using our discount code, which is A1Live. Okay, so this is specifically for you guys watching the streams. 25% off, big discount. You can get a really good price. A1Live, make sure to use it. If you're also wondering what kind of risk I personally use and recommend, I usually do 1% for phase 1 and phase 2, and then 0.5% for the funded stage. My rule is I want to give myself at least 10 losses for the phase 1 and phase 2. And I usually go for the 2-phase challenge because I find that the market conditions are the best and the general conditions are also the most favorable. I can hold trades over the weekend. I can trade news and stuff like that. So basically, 10 losses for phase 1, 10 losses for phase 2, and then 20 losses for the funded stage. That kind of makes sure, as a swing trader, that I stay in positions for a longer time and that I don't blow the account too soon if I have a drawdown, and also that I make some significant gains if I have a nice winning period. So yeah, that's about it. If you have any questions about funding or prop firms, you can ask it in the chat. But yeah, this is the 50K account and it's a bit down, so a bit negative for this challenge with ChatGPT. I will see how it progresses. One thing though that is pretty cool is in the last 90 days, ChatGPT made 23%. So it's just in demo testing, and from the beginning of this week, I started to live test it. Or sorry, beginning of last week, I started to live test it with a DNA funded challenge. So let's get back to the charts. Marco, can you do Swiss and JPY fundamental study? Well, for the Swiss, I haven't done much work, if I'm being honest. It's not on my radar right now, but for the yen, I'm looking at possible rate hikes. So I'm looking at possible rate hikes. I'm looking at the BOJ. They did have a meeting last week. They didn't do anything, so they did not raise interest rates. But if you read between the lines and if you read what they're saying, they want to hike rates. They want to raise rates to 1%. I think 1% is their goal. That should be bullish for the yen. Now, looking at the JXY, which is the Japanese yen currency index, we're kind of flat. So technical analysis is just flat. I don't have a clear bias right now. I would like to see a breakout. I would like to see what happens to USD yen as well. I have a short-term buy setup, which is a part of a different sort of approach. But I want to see a breakout out of the range. You know, just some sort of a breakout up or down. Long term, you could say I'm bullish on the yen because I do think they're going to raise rates. I do think that they're going to hike interest rates all the way to that 1% mark. And that should, in theory, make the yen move up. So that's my take. I don't have a lot of information for you, but yeah, for the Swiss, I'm just not interested right now. And for the yen, I'm waiting it out. I'm waiting for a breakout on the JXY. So, do you trade oil? No, I don't tend to place positions on oil, as I mentioned. Okay, let's see. Do positive swaps work with every broker? They should. They should. And with prop firms. So I can see from Slackmeister a question, do positive swaps work on prop accounts? Yes, they do. As you can see here on the DNA funded account, look at this section. So you have the commission, but you also have the swap. So because I'm short the SPX, it looks like I'm collecting positive swaps, if that is correct. And for the Aussie yen sell, I'm actually paying negative swaps. So yeah, swaps are calculated into the prop firm challenge. So if you're smart, if you can go long things like USD yen, things like USD CAD, Aussie CAD, those are all positive swaps. And if you're not sure what is positive swaps, what is negative swaps, you can check out the data on the EdgeFinder. See, USD yen is the best. If you can buy USD yen reliably and have a good level that you don't think is gonna break, for example, this level of support, if you have a reason to be long and you put your stop loss below this support level, you can keep collecting those juicy swaps. USD yen has one of the best swap rates, positive swap rates if you buy it. So that's how a lot of big players trade. They take swaps into account. They make a lot of money through swaps. And that is why I think the USD has not lost a lot of value, because it's expensive to go short on the dollar. Do you think big hedge funds, big pension funds want to go short on the US dollar and hold their position for 2 to 3 years, paying 4% every single year? I don't think they want to do it. So that's why I think they would much rather be neutral or maybe even buy some of it, because they need to buy stocks. To buy stocks, you need to have US dollars. That's why I think the whole short USD story is not going to happen. The big short on the DXY, I don't think it's going to happen. I think we're going to stay in this level or maybe even go up a little bit. So we are approaching the end of the stream. Let me check a few more comments. So given the current fundamental outlook, GBP/USD is a good short setup on a pullback. Well, to be honest, GBP/USD is not my favorite way to express going short on the GBP. I also have that Euro GBP buy setup, but I want to get out. So I have the take profit set. Hopefully it does hit. If it doesn't, I'll just get out for a reduced risk loss. But if Euro GBP hits, I'll be out. And I'm not looking to add into my GBP shorts. So just technical analysis is not there. GBP/USD is still overall pushing higher. Yes, there's sort of a consolidation here. But until we break some key levels, until we really start committing to the downside, I wouldn't really go short on the pound USD. It's not my favorite play right now. So yes, the pound, the GBP, the UK is right now a big fiscal sinner. They have some really bad data, but I don't think now is the right time to execute. I think waiting for a bit more is gonna be the play. Some brokers I know do not pay positive swaps. Yeah, these are probably not, how would you say it? So IC Markets, let's say I'm using IC Markets and that's a verified broker or a regulated broker, that's the word. And most of these unregulated brokers, they probably don't pay you any swaps. I would say most prop firms like FTMO do pay positive swaps. Yes, if a prop firm is reputable, they're paying swaps. And they're taking swaps, which is really good for them. You know, brokers love when you pay swaps. Prop firms love when you pay swaps. Do you recommend funding pips? I haven't done any research about them, so I cannot give you an opinion. Any thoughts on tomorrow's Powell speech? No, not really. I don't think it's gonna be a game changer. I think Powell pretty much expressed his thoughts last week. I don't think he's gonna switch on his hawkish tone. If he does, that's going to be pretty crazy. But I think it's going to be an kind of a non-event. I think it's going to be mostly noise. So I do not have the EdgeFinder. What's another way to find out positive swaps? You can go to your MetaTrader. You can find the currency pair that you want to trade, and you can hold your finger and click statistics. Okay, you can click statistics, and that will show you what are the positive swaps, what are the negative swaps. And I have approached the end of my segment of the stream. So thank you guys very much for watching. You can catch me tomorrow. I'll be here tomorrow. Again, my favorite thing is still gold, is still silver. I'm just not getting a pullback. If you're more of a short-term trader, if you want to look for those pullbacks, smaller ones, if you want to get in, I think you still have a good edge if you can get in some minor pullbacks. And that's about it. I'm waiting out the news. I'm looking at the Forex Factory calendar. I'm seeing what will happen with the news section. But so far, not really a huge game changer from the last Fed meeting. The next big event is going to be non-farm payrolls. Thank you very much for watching, and see you tomorrow.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.